Welcome, everybody. Thanks for joining us. We're just going to give it 30 seconds or so to let everybody into the room. Thank you for taking the time out to join us. I always enjoy a chance to chat with Paul. So we've got some interesting insights for you today. So thanks again for joining us. Just make sure everything's working. Perhaps pop in the chat box where you're joining us from. What's the weather like? It's clear here in Norfolk at the moment and reasonably pleasant. So there you go. Chat box is working. So thank you, Ian. In Birmingham. How's the weather in Birmingham? I would imagine it's probably fairly similar to us. But let's get underway. At least we know the chat box is working, so let's use chat box Q&A. Throw as many questions as you like. Plan is we are definitely going to be done within an hour. I would expect we're probably 45 minutes or so. But we are always very happy to take any questions you've got at all around the topics that we're talking about today. So for those that don't know me, I'm Will Farnell. I wear a number of different hats. First and foremost, I'm a partner at now TC Group, having merged our firm with TC Group 6 months ago now. And we are now TC Farnell Clark. So I set Farnell Clark up way back in 2007. Technology's been at the forefront of our business for a very, very long time. I've had the pleasure of working with Dext and Receipt Bank originally since about 2011. So it's always great to get the opportunity to join anyone from the Dext team to talk about what we're seeing and what's going on. And the main purpose today, I'm here as a co-founder and director of App Advisory Plus, and we try and help accountants and bookkeepers choose the right technology for themselves and for their clients. And to say, I'm joined by Paul today. Paul, do you want to give a quick intro?
I can do. Afternoon, everyone. Delighted to be here and joining the session with Will. So I'm Paul Odder. I'm our VP of Accounting and Product Strategy at Dext. I've been at Dext for about coming up to 5 years now. Prior to that, I was actually in practice for 21 years. I was a partner in a firm. I was head of our digital sort of strategy transformation. And Will and I have probably been doing these talks and webinars for probably nearly coming on to a decade. It
I
won't
would imagine so,
be.
Paul.
Yeah, as well. So yeah, really looking forward to the chat today.
Excellent. So, in terms of what we're going to cover off with you today, we're going to talk a little bit about some of the market challenges we're seeing, because this is very much about what are we doing now, what do we think we might see in 2026. All the talk about AI and MTD, of course, which I promise we won't talk too much about MTD, but it is on the horizon for 2026, so it'd be wrong of us not to mention it in passing. So we're going to spend a little bit of time just on those challenges. We're going to think a little bit about what Paul talks about as connected workflows, and Paul has this great analogy with the way McDonald's approach the way they run their business. And for me, it's very much about how do we get the optimum blend between people, process, and technology. So between our two different angles on that, we're going to touch a little bit on that. We'll talk a little bit about technology, best of breed. Um, but a big chunk of this is really about kind of, are we getting ROI? Are we using all of the features in the technology that we're using? Because say we hear all of this about what AI is going to do, and I make the point regularly that we're still only about 20% adoption of basic cloud accounting tools and technology. Firms are not even using automation. Xero's own research tells us that only 40% are using bank feeds. We could go on and on and on. So we're really going to focus on are you getting the most out of the technology you're already using? And then we're going to start to look at what's coming. What do we think is going to happen with agentic AI and various other things in 2026? Is that a reasonable summary, Paul?
It is perfect. Yeah,
Excellent.
so quite a lot to cover actually.
That's it. Well, let's get cracking. So, current challenges, Paul. Do you want to kick off a little bit in terms of what you're seeing?
Yeah, definitely. And I don't think any of these sort of things will be of major surprise to everyone joining today. But there is clearly an increase in demand from clients, which is putting more and more pressure on accountants and bookkeepers. And And that I strongly believe is only going to increase, particularly with the budget that we've got coming up in November.
Oh, yes.
And and there's this, there's lots of rumors flying around, but there could be some significant changes potentially in the budget. We won't know until the day, but if things around VAT does change, if the thresholds do change or the registration threshold, that is just going to compound this issue in terms of client demands. And whenever there's periods of uncertainty as well, in which we're in, there's often more client questions. There's more sort of forecasting, modeling, remuneration planning, structuring the entity in terms of the right sort of entity type. All of that is putting on a lot of pressure, and there is a lack of capacity within firms, and meeting those client demands is is becoming a challenge. Sadly, we're also seeing the sort of mental health issues starting to creep in more and more as well, where there is some real challenges for individuals trying to cope with all of this. On the positive side, some of these challenges can be resolved with efficient workflows. I'm putting inefficient workflows as a challenge because there is still disconnected systems, disconnected workflows, and often duplication of work. And there's pressure on fees as well, which is why I put that sort of compliance to advisory. Compliance isn't going away. Compliance is going to be increasingly automated. And advisory is a term that I really struggle with anyway, but ultimately helping your clients and things like that. So there is a lot going on. And then that final point about the mid-market squeeze and yourself, Will, now being part of TC Group.
Yep.
And that brings in its own challenges as well with all of these acquisitions and mergers.
Yep. And I mean, just taking a view on some of this, I mean, the client demands one's an interesting one. You're absolutely right. The budget is going to throw all sorts of curveballs at us. Um, it's going to be depressing for everybody, but the one saving grace is it's probably going to keep us really, really busy. So we should try and draw as many positives out of it as we can. But I think the other thing we're increasingly seeing is what I always talk about as almost the Amazon effect, that it's yes, clients have got demands, but their expectations of how quickly we respond to those demands is getting shorter and shorter and shorter. So there's almost this expectation of always on, always there, and it leads into so much of the things that I'm sure we're going to talk around in terms of having access to the right data, but having the information available to give the kind of advice that we need to. And your last point there around compliance to advisory, ultimately we can't do any kind of advisory if we haven't got the core data that we need to be able to drive the conversations, because actually advisory is really simple. It's just having a great relationship, isn't it, with a client, and knowing that
100%.
you're going to be that person they come to when they've got a problem. Um,
Yeah,
but I mean, with all of these challenges, it creates opportunities.
it does. There's a lot of opportunity as a result of this.
Yeah. So that's kind of the landscape that we're talking about at the moment. We're going to try and kind of go through some of this, particularly as we say, the workflow component of this part of the webinar. So as I said at the beginning, I think of this as people, process, technology. We have to get the right blend in terms of having the right people doing the right bit of the process, using the right technology, and getting that right delivers world-class client experience. And delivering world-class client experience means that clients will keep coming back, they'll refer us to friends, and we are able to grow the businesses that we have. What's your take on this, Paul, and the concept of the factory?
Yeah, and it may seem a little strange having McDonald's there, but when I was still in practice, for anyone who has watched the film The Founder, so this is probably back in 2016, 2017, maybe. Um, I remember watching that, and there's a scene in the film where they're in the school playground and they're trying to sort of work out where everything should be, but at the start they keep on bumping into one another. It's chaos, really. It's a mess. And I was sat there watching it, and then I started thinking about our firm, and I was thinking about our bookkeeping processes for clients because it was inefficient. There were problems with it, and I came up with this concept called the factory, which is really the whole process in terms of getting information in all the way through to the deliverables, whatever you may be doing. And why this is important is, and when you're looking at McDonald's, the processes they have within McDonald's is no different when we're thinking about bookkeeping and we're thinking about the technology and we're thinking about the people doing that work. If you imagine going into McDonald's and you order something, but the first thing on the belt or the cooking sort of area, the kitchen area, is the tomato. And then the next bit is the salad. And then the next bit is the burger. And then you get around the corner and you find that you don't have the bread buns. You've effectively got a very inefficient workflow because you haven't got it all perfectly organized. Secondly, you've got incomplete ingredients or records in this sense because you haven't actually got the bun. As a problem, the issue with that is you keep on going round and you find that you're missing bits. You go all the way back to the start, or you've got someone sending an email or phoning the client going, can we have your bank statements? Can we have the missing invoices? Can we have this? And when you have this inefficient workflow, incomplete records, you're going back and forth between the stages. So in terms of my factory, the raw materials was getting all of the paperwork. The second stage was the manufacturing stage, as I called it, which was the general ledger. Then you get your quality control, which could be sort of Dex data health and insights, or previously known as precision, or you just go straight to your working papers. What often happens is you start your working papers, the team finds that something doesn't reconcile or something's missing. They go all the way back to the start to get the information and they update it. And then you go through the process again, get to your working papers again. They then spend another day and they're really, really pleased with themselves because they've managed to tidy it all up and they've got it absolutely perfect. You've then got your draft accounts, they go out the door. You're looking at the time on the clock in WIP and you're billing this client £1,200 and you've got WIP of 3,000. And more often than not, that WIP gets written off. And if you're lucky, you may be able to position an additional fee. Imagine a world where you've got, like McDonald's, everything is running smoothly. You've got all of the information in. You know that the records are of good quality. You know that when you start the working papers, the bank is going to reconcile all of these other things. And you can move from one stage to the next efficiently and effortlessly as possible by having that and having the right tools in place along the way and using the features that are available, it's that will create this additional capacity. It's that will keep clients happy because it's a quicker turnaround. It's that allows you to deal with some of the challenges that are in place in the market at the moment that we've discussed as well, because time is precious. And if you don't have these efficient workflows and you're back and forth, and I remember having files by my desk when we still did paper files, all of these incomplete jobs because I was waiting on information has an impact on your lockup within the firm. It can cause stress for team members because nothing's getting finalized. And it can actually have that impact on the client relationship because clients may be chasing for stuff. So for me, I came up with this concept of the factory and I focus very much on each core part and making sure that I had that seamless workflow in the same way that McDonald's has that perfect workflow from start to finish. And most people leave very happy with everything that they wanted.
Mm. And I mean, I know we said we weren't going to talk about MTD, but I mean, clearly MTD is simply going to compound because we get these clients that are generally the more disorganized clients anyway. And instead of having to deal with them once a year and chase records once a year, we've got to do that 4 times a year.
Correct.
Like where does this fit? Does it
It's
just
exactly the same.
emulate it?
It's exactly the same principle that if you haven't got that information coming in as close to the sort of date of the transaction, all what's going to happen is every quarter you're going to be spending chasing clients. You're going to be having that challenge of, not being able to finalize it. And we already have this to an extent with VAT returns and things like that, that every quarter, depending on VAT staggers and everything else, there's this peak. The problem is the VAT return is then done and completed on the 6th or the 7th, and then clients are informed of the liability. Clients then have cash flow challenges, and it just compounds all of these issues. With
Yep.
MTD for income tax, just imagine information coming in as very regularly. Clients, this is where Dex Solo is very powerful, taking a picture, information coming in. So when the quarter has passed, you've got everything there. So
Yep.
now actually you're not spending time chasing clients. You're just spending that normal amount of time reviewing, just double checking everything's been categorized. And then the quarterly update shouldn't be a last minute item, an issue. It should be fairly quick. And then the finalization is what we have now. But actually, that finalization of the January return, I actually think we may not have that January issue to the same extent that we've had in previous years.
Yeah.
Because if the SA 103, the SA 105 is already done, then what you're really asking clients for is any other income, bank interest, pension contributions, investments, things like that. You're not, you've already got a good starting point. And there's also the benefit of MTD for income tax is a great opportunity to consider how you're billing clients, the frequency
Oh
of
yeah.
billing. Many of you, I'm sure, are sending a bill out once a year, maybe. This is the real opportunity to start to accelerate that billing.
Improve your cash
Yes.
collection, all those other things, and
Yeah,
we've
exactly.
spent the best part of 10 years, Paul, talking about the importance of live data and
Correct.
regular bookkeeping, and I mean we have to stop and think about this, even for those sole trader clients within MTD, because otherwise you're going to have 100 quarterly jobs every quarter or whatever the number's going to be for
Yeah.
your firm. That's just going to make these peaks that you already have with VAT returns just completely unmanageable. So we've got to look at how we spread this workload out, how we encourage clients to get us that data as they're spending the money. Because it's good for us, it's good for them. So I genuinely hope that this is finally that catalyst that's going to swing us to really
Correct.
challenge the way that we run our businesses now and start to say it makes perfect sense for me to get this data, process it on a regular basis to just flatten out all those peaks that we get within our typical year.
100%. And there's increasingly firms now that don't have WIP, they don't have debtors.
Hmm.
Everything, they've automated all of that stuff, part of the process, which means less time is now spent chasing clients, less time is spent on debtor collection. And you can't, and I think it's important, you can't do all of this overnight. You've got to understand what your existing workflows are and then start to identify where do you want to focus first. Where's potentially some will look at what's the easiest ones to fix first. The other way to look at it is which are the areas where there's the greatest opportunity to adapt and change, but may take a bit longer. The most critical part is often bringing the team in that journey as well.
Yep.
Because
Yep.
if the team are brought in on that journey, the success and the outputs will be far, far greater compared to one or two individuals just trying to make a change.
I mean, fundamentally, this is about utilizing the tools that we have access to in the way that they were designed to be used. Um,
Correct.
because we talk about our cash collection and our billing, and if you bill and I mean we'll still talk about the sole trader MTD people here for a moment, but as an example, but if you bill those people currently once a year, the obvious opportunities you can go to once a quarter. Um, but actually, my challenge is we'll go to once a month, but it gets really difficult to justify billing somebody monthly if you're still only doing a job on a quarterly basis. So if you want to move to a monthly billing cycle with all of those clients, which brings your cash flow forward by in some cases 12 months, which is so therefore it's a great thing to do. You've got to be in a position where you're delivering the work on that regular basis as well. And these tools are designed for it, whether it's Zero, whether it's Dext. Rod Drury said we're building bank feeds so every small business owner can do a little bit every day. That's the start point of where these tools were designed to be used, and Dex is about real-time data collection. We want to get the receipt the day that somebody spends the money. Um,
Correct.
yes, there's education, but it's in our interest and it's in the client's interest. So that sets the scene nicely, doesn't it, Paul?
Yeah, 100%.
Um, what we want to do is just think about this concept of automation. And as I said a moment ago, we've got AI. Everyone's telling us AI is going to do all of this amazing stuff for us. Um, I've said for the best part of 5 years now, we're at 20% adoption of cloud accounting technology. Already mentioned zero zone data suggests that 40% bank feeds, 36% are using data capture tools, which I don't believe. I can't believe it's that high. I think Paul would agree with me on that one.
Mm.
Um, so should we be concerned? Like, what's the reality? Where's the actual valuable use cases of what AI is doing if the majority of the market are still choosing not to use basic automation? So Paul's going to take you through a couple of bits here, just in terms of giving some examples about how you should be thinking about ROI from the technology and feature usage of the tools that are already available to you.
Yeah, 100%. So what I'll do is I'll share my screen, and this is an ROI calculator that I came up with. When I was in practice, I was always asked about ROI and what's the return and everything else. So I've came up with a calculator which is focused on DEX, but it's the principle that actually applies to all of the products that you use because it just demonstrates the importance of feature adoption and how by embracing more features, obviously the ROI goes up, you create more capacity, and then you've got the decision on what you want to do with that capacity. I just share my screen and I'll
And
just,
while you're doing that, Paul, I think the part of the challenge here is that I often talk about our firm, and we started using Dex or Seatbank as it was back in 2011, and we were a small firm. I learned how to use it. I recruited members of staff. I showed them how to use Dex. We recruited more staff. They showed people how to use Dex. 10 years later, so in, I don't know, 2022, whatever it was, we were still using Dex in the way we were using it in 2012. And like,
correct.
technology moves on, and Dex added all sorts of functionality to the system over that time. So it's absolutely critical that we stay up to date in terms of the tech that's been put into the tools that we use. Most of our SaaS software providers are running on 2 week sprints, so they're dropping new technology or new product features, functionality into the tools every couple of weeks.
Yeah, Dex, we released 172 updates last year. And I think this year we will probably beat that number. Now, some of these things are small, some of these things are quite significant, but all of all of the tech companies continue to evolve, bring in new features, and it's that can make the difference. And not every feature is going to be suitable for every client, but it's having that awareness and using the features on client with clients where they are relevant. And one of the challenges is trying to keep up to date with everything, which is why I'd always recommend going to events, joining webinars, and speaking to sort of your peers as well, because it's keeping up to date is going to make the big difference. But terms of this ROI calculator, I'll just quickly run through it in terms of the sort of concept because it does help demonstrate why it's important to use the features. So, first question is number of clients you're providing bookkeeping services to. Let me just put in, I'm just going to put in 100. Um, Average number of transactions per month, we'll just say 30. That may be a little bit on the high side, but there'll be some doing a lot more, there'll be some doing less. Average charge out rate for bookkeeping work, that will vary across the board. I'm just going to put in what I generally hear as an average. This is just the charge out rate. It's not necessarily what's being billed, as we all know. Dex efficiency, I'll come back to this, but I'll just leave it at low. When people start Dex, there will be some immediate efficiencies. Processing time per transaction. I spent a lot of time researching this. We default it to 3 minutes. Now, people will always say it doesn't take me 3 minutes to put in an invoice. I know that, but it's all of the additional time in terms of chasing clients, incomplete records, An individual can't work 24 hours a day. Mistakes happen. One firm I spoke to, I originally defaulted this to 3 minutes, but they were like, oh no, 7, 8 minutes. Other firms are like 2 minutes and things like that. It's just an idea, a sort of a baseline. Average recoverability, I'll leave it at 80%. Whether you on charge the cost of the software, many firms absorb it. Some of you on charge it. I'll just leave it to it's just fully absorbed by the firm. Like with all software companies, there's often discounts and promotions, so we can overwrite the initial thing. And just because we create this additional time, doesn't mean it's all going to be used on billable work. So I'll just leave this at 50%. It doesn't mean the other time that we're creating isn't of value. We just can't quantify it. And if we then just quickly run down the calculator, number of transactions, 3,000, 100 clients, 30 transactions on average, with Dext or without. Time taken to process without Dext, 3 minutes per transaction. 3,000 transactions, 150 hours. With Dext, 30% efficiency. Time spent is 105 hours. So that's 45 hours saved every month, 540 hours annually. Amount billed, that's total number of hours times the charge out rate times average recoverability. Shouldn't change whether you use Dext or not. The value of the work remains the same. So 8,400. 100 clients on Dext will cost £715 a month, £7.15 per month per client. The more clients you put on Dext, the lower the price. We're not on charging any of the software costs. So the cost of the firm of the software is £715. But we're creating an additional sort of 45 hours approximately in capacity per month. And we're saying 50% of that is going to be used on additional billable work. So 23 hours at your charge out rate of £70 an hour, recoverability of 80%, gives additional fee income of 1,260. But we've got to knock off the cost of Dext. So net benefit to the firm, 8,945 compared to 8,400. Monthly net change, positive benefit, cash benefit of £545. But when I created this was all about why it's important to use the features. So when you start using Dext, you may only use some of the core features, and that will give you some benefit. But we want everyone to really embrace more and more of the features, of which there is a lot in Dext now, and this list continues to increase. More
Would it
recently,
be fair to say, Paul, that the majority of your user base is in that first column?
yes,
Yeah.
yeah, I completely think it would be, because everyone's overwhelmed, they're busy, they don't have time necessarily to always stay up to date.
Yeah.
This is why it's so important when you start looking at, we did prepayments the other week, we've got automated supplier statement reconciliation. All of these things can make a difference. So we want everyone to move up from low to medium to high. And if you jump to medium, all of a sudden you can see what that return means every month. It's gone from 575 to 1175. Get you to high, and we're now at £1,800 a month better off after the full absorption of the Dex costs. You could, in theory, get even higher than 60% if the nature of the transactions means you can use auto categorization, auto publish. You've effectively got no hands bookkeeping. The reality is, I don't think there's many scenarios of it. So this is taking a very prudent approach, and this is now being used in hundreds and hundreds of calls across all of our regions, because it demonstrates why it's so important to have dedicated individuals to keep up to date, build relationships with your account managers, and understand the new features that are coming out. Because it's that, when you start to embrace those features, is really going to make a difference. And obviously, if you use more of the capacity, on additional billable work, the numbers can suddenly get quite significant
Mm.
because it's that value of time. For some, it's just having time back, it's time with family. It's just time to not do anything on an evening or weekend. It has a value. We just can't measure that. So that's the ROI. And this sort of thought process actually works on all sort of solutions that you may have. I think it's so important to understand the ROI rather than, when you're looking at your reports from your practice management system where you've got total time charge, total billed, written off, recoverability.
Yeah.
Those are important, but we want to improve that recoverability. We want to reduce those write-offs. And how do you do that? You start to bring in more automation.
Yeah. Just across your kind of entire user base, just to give some context to this, do you have the numbers in terms of like the average usage of some of the bigger kind of automation components, supplier rules, auto publish in terms of
Yeah,
percentage adoption?
and it can vary massively. This is the interesting thing when I look at individual accounts. There's some firms who may only be at 2% for auto publish of sort of documents. There's other firms who are at 30% for auto publish and sort of 40% for supplier rules, 50% for supplier rules.
Mm.
It does vary quite significantly. Um, but I think something like auto publish is not used anywhere near as much as it could be because there's that worry that something's going to be published incorrectly, like a statement. What many don't realize is within settings, you can actually define which document types you want to be auto published. And we have an AI that identifies whether something is an invoice, whether it's a receipt, whether it's a statement, whether it's a goods received note, whether it's a purchase order. So we identify the document types, and from there you can then decide whether to use auto publish, let's say. And I would always say every client should have auto publish on for at least one supplier because generally utility bills, phone bills, the
Yeah.
nature of the transaction
Accountant's
never,
bills.
yes, the nature of the transaction never changes. I would never recommend using auto publish on Amazon or Tesco's because Tesco's sell everything. So
Yeah.
you just don't know what it should be. Those are the transactions you want to spend a bit more time on.
Yeah.
The low risk, no change in the nature of the transaction. We always extract it perfectly. Take away all of those and let them be dealt with within the system.
Yeah. And is that ROI calculator available on the public facing site?
It's not at the moment.
Okay.
It's something I was actually speaking with the team about the other day. If anyone would like to run through that and you're already a Dext partner, reach out to your account manager. If you're not using Dext at the moment, but would be really interested in just running through it, by all means, reach out to myself, paul.lodder@dex.com, or I'm on LinkedIn as well, and I can arrange for that to be done. We've used it quite a lot at the events more recently with big screens, and it's created a lot of activity because it really helps people realize that just signing up to software
Hmm.
doesn't suddenly mean you get all of these benefits. It doesn't happen straight away or overnight. You've got to invest that time.
I think the real value is seeing that list of features
It is
almost in terms of going down them and saying, right, okay, what are we using, what are we not using,
100%.
or where are we not using? We're using supply rules a bit, but how do we make sure that we're using it consistently? Um, because it's so easy to just not know about stuff that you could be
It
doing.
is.
And I remember in the early days, kind of using filters and things to filter out
Yeah.
all of your non-VAT invoices right at the outset and things.
Yeah.
And so many people just don't do it.
No, no, 100%. And this is where, you know, you don't necessarily need to use everything, but there are some massive time savings. Even on our mileage tracker, which now has GPS and on the mobile and everything, supports company cars, supports private vehicles, uses approved rates, advisory rates, calculates the input tax on the fuel element. it may not be a huge time saver for you, but it could make a massive difference for your clients, which in turn means you also get better quality records coming through as well.
Yeah.
Rather than the conversation at the end of every year of have you done any business miles this year? And it's often how many did I do last year? And
That's out of it.
yeah, so let's just play around with the number, which is high risk, particularly with HMRC, who may ask to see all of the supporting evidence for these trips.
Yeah.
And all of that can be fully automated.
Yeah. A question coming in from Ian says, hi, Paul, if we want to update our team on all latest features as a Dex partner already, do Dex provide update sessions to partners? I know the answer to that, but I think it kind of depends, doesn't it?
It can do, depending on the number of clients, the number of subscriptions or licenses you have with us will determine whether we do in person and one-to-one and things like that. But we also do a quarterly product update every quarter, where we run through some of the more recent things as well. But reach out to your account manager. If you're not sure who your account manager is, please reach out to myself and I can
Mm.
sort of double check behind the scenes. But we do have a support team, many of whom are ex-accountants who are there to help in terms of um, feature reminders and product updates and where things are.
The
Definitely.
customer success team, I know Katie very well, leads that team, and I know Katie is really keen that firms make use of the support that is available to them.
$100.
And that support is based on kind of your investment into Dex.
It is.
But there is levels of support available for everybody. So do talk to your account manager, Ian, and we can kind of get you to the right place.
Yes, definitely.
Right, let me jump back into some slides here then, Paul. So thinking about the next year. I mean, we are now in quarter four, aren't we? We're there already. It's frightening how the year goes. What it also means is we're two quarters away from MTD. But we'll kind of we'll park that for the moment. I mean, there's a bunch of stuff on the screen here. I don't want to kind of read it out, but essentially, I think this whole drive towards better live reporting, which is in there, the shift from compliance to advisory. How do we do that armed with data? I talk about the fact that accountants used to have great relationships 25, 30 years ago. Compliance got in the way, that overtook relationships. We now have the capacity through technology to have really strong relationships with our clients. And if we focus on the live reporting element of that and we collect live data and we do regular bookkeeping, those relationships are powered by insight that we'd never had 25, 30 years ago because we didn't have access to the data that we do today. So we are in a great opportunity. AI is going to overlay a whole load of other stuff for us, and I'd certainly like to push Paul a little bit in terms of Dext's AI strategy, because we know there's stuff coming down the road. I was with Zero recently, and their beta of their agentic AI bank rec is due next month. Actually, we're in October, aren't we? So I think the beta goes live this month for some of the all AI driven bank reconciliation functionality. Um, so where are decks at, Paul, with AI and like real l- genuine use case AI rather than, oh yeah, you can do some stuff with ChatGPT, which obviously we know
Yeah.
is like it's fun, but
I mean, we've always had AI indexed, as I'm sure everyone's aware of, in terms of whether it's the AI descriptions, whether it's AI for the categorization. But the next stage for Dext, which is actually going to be pretty imminent, is AI bookkeeping agents, where we will have AI bookkeeping agents within the Dex platform that will actually learn from your team's behavior in terms of are there things that they always change? Are there features they're not using? And the AI agent will actually then flag to you of where there are potentially efficiencies. There will be recommendations. So what we're not going to do is suddenly have this AI agent that starts changing settings and everything else. We will have AI agents built into the platform that if, for example, an invoice is always uploaded and the person doing the bookkeeping always changes the category without fail from motor expenses to travel, the AI agent will be there to say, look, we see that you always change this. Why don't you go into supplier rules, change the category to travel so that going forward, you don't need to do that. We'll also do it on the AI agent because it will continue to learn if you're using tracking categories. You'll be able to set up rules that say, if this invoice from this supplier always has this address or has this address, please ensure that the tracking category used is Birmingham. So this is something that will continue to evolve and develop, and it will complement the tasks and the work that you are doing. You still need the accountability, you still need the expertise, but what it will start to do is help you get more out of Dext and remove some of the friction or some of the bottlenecks or some of the tasks that are repetitively being done manually.
And I
Um,
assume that ultimately it'll get to a point where rather than say you could go and do this in settings, it would say, would you like us to update this setting for you?
Correct, correct. What
Yeah,
we don't want to do, and I would never want this, is something to suddenly start changing things.
without telling you.
You need to be in control. You need to be aware what's happened, and you can ignore some of these things. And we will actually, because our sort of AI models, if you ignore it or dismiss it, we'll ask you why in a way, because that's how it will continue to learn and get better and better and better. So that I think I can't remember if we're planning maybe in the next couple of months, October, November, where you may start hearing more and more about this. We will, our next quarterly product update, have more of a deep dive into this as well. So I'd certainly encourage you to sign up for that.
Yep. And question around free agent integration. What is all of this stuff going to apply to free agent, and how is your where are the, I guess, the shortcomings in your free agent integration compared to zero?
Yeah, it's a good question. Our challenge is we have a capacity challenge as well. We integrate with, 20 different sort of GLs, and we have to try and ensure that these integrations are always working well. And as a result of capacity challenges, it does sometimes mean that we do something for one GL, like we've done Dextension with Zero and QuickBooks, but we haven't been able to expand that with the other GLs at the moment because other priorities come into play. But we are always very much focused on trying to ensure that we have consistency of features across all of our integrations. But time is our challenge, unfortunately, and and our focus is, we have more integrations with Zero compared to any other product. So that's often the GL that we start with, and then we gradually expand and roll out to others where possible. Sometimes it's not possible because the APIs won't allow it. But we do always want parity where we can across them all.
Yeah. And to kind of put you on the spot a little bit now, Paul, and I didn't prep you on this one either. If you had a crystal ball, and we kind of look at 12 months from now, given the rate of AI enhancement,
Yeah.
um, what do you think is a realistic prospect for accountants and bookkeepers in 12 months' time in terms of what you and you must have an idea of where your roadmap is in terms of what
Yeah.
you're thinking, and you can kind of almost look at that and say, well, what might Zero and QuickBooks and Free Agent and others be doing in their platforms? What do you think is a potentially realistic view in 12 months' time?
It's a very good question. I'm going to split this into two parts. In 12 months' time, I think technology will be there that will allow pretty much no hands end-to-end bookkeeping because we're already seeing that with Zero with the auto reconciliation.
Yeah.
With Dext, you've got you can already get information into Dext. It can be fully categorized. It can be auto-published without any human involvement. But the second part to this is, yes, all of these features, this AI may be there, but the accounting and bookkeeping market has to trust it and buy into it and really embrace it. So even with the technology, I'm not sure how further ahead we will be in 12 months because I think there'll be the challenge around adoption and there's worries with that. And one of those worries is people may think, well, what am I going to do? Is that just going to replace me? It's not going to replace you. It's going to create opportunities to focus on other areas, to expand into other areas, to have more regular conversations with clients. So I think there's been a lot over the last 12 months. I think the next 12 months is just going to be transformational in terms of what's potentially possible.
And of course, as you rightly say, it depends on the market adoption of the
Correct.
tools because we go back to the 20% and the fact that 60% of people are not using bank feeds and 74% of people, whatever the number is, 64% of the people are not using data capture tools like Dex, Auto.
Yes. Yeah.
Other.
Exactly. When
So
you,
it's got to do it. Take the horse to water.
yeah, yeah, exactly. If you're not embracing what's currently available, I can't see why people are suddenly going to jump to new AI tools when the foundations aren't necessarily in place.
Yeah, that's it. I mean, we've done lots of stuff with RPA and bank rec bots and things like that. And the challenge is if you haven't got the core right, you don't get the value from the RPA because if you
Correct.
haven't got bank rules set, if you haven't got supplier rules set, and all of this, you're not getting the benefit from the newer cutting edge tools because they haven't got the data to work on. So it all comes back to that beginning, doesn't it? One more question here. Are there any software developments between Dex and Iris since December? I'm assuming this is because of acquisition. So there's a couple of angles there. Is there integration stuff going on? And equally, does the Iris acquisition uh, accelerate, change anything in Dext?
Yeah, if anything, it gives us the opportunity to accelerate more indexed.
Mm.
It certainly doesn't slow us down in any way. If anything, I was saying to Will earlier, one of my challenges at the moment is there is so much going on, and it's trying to keep up to date with everything that we are working on and developing. So the benefit with Iris is it does accelerate everything, but also together there's more of that workflow that we're able to complete. And there are ongoing discussions between us both in terms of how can we, when looking at that workflow, make it even more effortless, make it more efficient, give you better insights, make it easier so you're not rekeying things in as well. So, yeah, there continues to be sort of ongoing discussions there. But with Dext, it's business as usual. And as you know, some of our recent releases that Will's just showing here, we've just released some new line item extraction functionality and AI around that and the grouping of things. An example of this is if you get a long invoice um, of multiple items, you can now use AI with Index to say if it's food, any food item, group them all together. If it's clothing, group them all together. You can group by specific narrative. So if it says Pepsi, Coke, Fanta, I don't need every one of those being sent across to the ledger. Just group them all under fizzy drinks. Prepayments, there's some enhancements coming to this, but that was released the other week, so we can automate all of the journals within Zero. Mileage, as I say, we've done enhancements on that. We've got Vault, which is an AI storage area, now available on mobile as well, expanding some of the data health and insights checks with QBO. WhatsApp submission, that was only the other week, so you don't even need to give a client the Dext app anymore. It can just be done via WhatsApp for cost items. VAT checker, we can extract the VAT numbers, cross check that to HMRC, make sure number one, it's a genuine VAT number. And then number two, we actually check that that VAT number belongs to that entity as well. And then something I haven't mentioned here as well, but I'm sure you're all very familiar with, is Dex payments as well, which is very much moving forward at speed, and there'll be a lot more on that over the next sort of couple of weeks as well. So there is a lot going on.
And what do you expect to see over the next couple of months, Paul? What's coming?
The,
What's coming
the
next?
bookkeeping agents definitely is a big focus. We're also working on an efficiency score, so really helping you understand the efficiency score, time tracking. We've also got as well, so we'll be able to tell you how much time is being spent. That will link to efficiency. Um, Payments is another big initiative. Further work on MTD and Dex Solo, although that's, a very nice product as it stands now, but there's just some further enhancements around jointly let property. And then longer term, there'll be spend cards, there'll be payroll payments, accounts receivables. So we're not slowing down. There is a lot.
And the time tracking one is really interesting. It's not time recording. It's not to replace what you do within your PM systems and everything else, but being able to get visibility of how long your team are spending on tasks and processes within Dex. So it's really about giving you the ability to be able to, as Paul says, look at the efficiency, look at the productivity of the way that you're running your bookkeeping function. So I'm slightly excited about that because some of the the real challenges that I want to address is understanding individual team efficiency in terms of how they're using Dex. Do we have consistency? Do we have one team that's consistently outperforming another? And if so, what are they doing differently? How do we identify that best practice within the product? So I did get a brief insight into that, and it looks really interesting. So
Yeah, that's an exciting one because I think that is where you can really start to understand where there may be inefficiencies and where people are, some of the team are very efficient. First phase, which is already happening behind the scenes, is just tracking that time, and it actually works. It's not always, I know when you go into Dext, you may get a phone call and you stop working in Dext. It only starts tracking the time when there's activity, and
mm,
there's a 30-second sort of safe stopgap. So if you stop doing anything for a period of time, we stop tracking, and then when there's more activity it starts again, so it starts to become very, very accurate, and we'll be able to actually pull out insights in terms of what's actually been done.
the key here is that this is all about building greater efficiency to enable us to offer more bookkeeping to more clients at a level of pricing that they're going to buy, which in turn gives us access to data to have the kind of conversations we have to be having with our clients. In an AI-driven world, this is the key.
It
So
is.
the more clients we can get engaging with us on bookkeeping, giving them live data is the key to the next evolution of what we do as accountants and bookkeepers, without a doubt.
Yeah, 100%. And that's what's exciting because we all want to help our clients. We all want to add value. And when you've got the opportunity to have more conversations, that's only a win-win in my mind. The more conversations you have, the stronger the relationships, the more opportunities. You really start to understand what their goals are, whether it's personal and business goals.
Absolutely. So just to kind of wrap things up for you, I mean, a bunch of stuff we've looked at here. We've talked about workflows. We've looked at ROI. If you want some stuff on that ROI, do reach out to Paul or your Dext accounts manager. Take a look at the features and the tools and make sure that you're using them. And really start to think about the things that are likely to hit us in 2026. Um, We've answered a few questions during the course of the session, so thank you for those. If anybody else has any questions, pop them in now. We're very happy to answer them. if you aren't already a Dex customer and want to have a conversation, the QR code there will take you to Dex site. And equally, if you not familiar with App Advisory Plus and our platforms, do jump on there and take a look. Um, Paul, thank you very much
Thank you.
for joining us today. Thank you everybody that joined us and has stayed with us throughout. I always take that as a good sign that we've shared some insight that's useful. So thank you, Paul. Thank you everybody for joining us. Any questions, do reach out to us. But otherwise, enjoy the rest of your day and have a wonderful weekend that is not far away. Thanks, Paul.
Perfect.
Take
See
care,
you
everyone.
later.
Thanks for
Bye bye.
joining us. Bye bye.